For those of you who have maybe not met Jack before or who haven't been on a Zoom with him, he's our company CPA. And you guys know, as an independent contractor, you don't do your taxes the same way that maybe a W-2 or W-4 employee might. So Jack is going to break that down for us today. And he's also here as a resource to answer questions. So now is the perfect time to ask all the questions. Jack, thank you for being here, and I'm going to let you take it away.
Yep. I probably have all the answers too, because, I just do. Yeah, no, for those of you who don't know me, I'm the CPA for C Villa, sorry, the brand. Yeah, I'm here to help you. I'm here to help your clients. I am happy to answer any questions you or they have. So you're always, feel free to share my contact information with them. I typically won't charge somebody if they have, a 5-minute question or a 10-minute question. If it becomes more convoluted, then they become a client. But, initially, I'm happy to help out if somebody has a quick question about taxes or 1031 exchanges or capital gains or those kind of things when it comes to buying and selling real estate, or, anything else for that matter. I really wanted to go, I wanted to kind of talk to you guys a little bit about the different structures that you could form. A lot of you are just sole proprietors, which is fine. There's, also the option to be an LLC, also the option to be an S corporation. And I'll kind of go over the benefits of each one of those and why you would choose that. I also want to talk to you a little bit about buy versus rent. For those of you who have been on a meeting with me before, that that's something that I've talked about before, but I think a lot of people don't really understand it fully. The benefit, they just think of home ownership as being very expensive. And I think it's a good tool for you, for your clients. I'm actually going to start with that. Can I share my screen, you think? You think that's something I can do?
Yeah, you should be able to. Should be on the bottom, the green button. Then you can select like your desktop or window.
Let's see which one. How about this one? Share.
There we go.
Okay. Are you guys seeing this Excel spreadsheet?
Mm-hmm.
Yeah?
Yep.
Okay, good. Very basic, kind of down and dirty spreadsheet, but let's say you have a client that's buying $1 million house in Carlsbad. First of all, congratulations, they found $1 million house in Carlsbad, because that's kind of hard to do right now. For example, let's say you have one, right? To rent that same house right now is approximately $6,000. That's a sunk cost. You don't get anything from rental. Your average for the first 5 years, your average interest payment would be this. Your taxes per month would be this. Your insurance per month would be this, and so on. Basically, what this runs through for a client is to show them that even with just all of the costs, including principal, which is another, $900, you're basically looking at $6,600 as a cost to buy that house, and that's including maintenance, that's including an HOA fee, insurance, taxes, all of that. It's $600 a month more. Well, kind of. So principal is like a savings account, as you guys know. You have access to that through HELOCs. You're really just putting money back into your own pocket by paying principal on a house. So that's not a sunk cost. So I don't really count that in to the cost here, which is the kind of total cost of owning. They also, if they're making between $95,000 and $182,000 a year, they're in the 24% tax bracket, which means that they get a monthly deduction off of what they would owe in their taxes of $200 from paying the property taxes and about $1,000 from paying the interest. So really, they're going to have tax savings on home ownership of somewhere around $1,100 a month. So in actuality, their actual cost of ownership is this, which is the cost of, and that includes principal. So it's $5,500 a month. If you take the principal out, which is like I told you, which is like savings, their sunk cost in owning the same house that they could rent for $6,000 a month is $4,600 a month. So really they're saving nearly $17,000 a year by buying this house versus renting it. Now that does make the assumption that they have money to put down, and there's lost benefit from that $200,000, whatever they put down, that they could have, invested elsewhere. So there is lost benefit there as well. But you can see that, it actually in the long run is cheaper to buy that same house than to rent it. And that doesn't take into account at all appreciation. So you're actually, you know how it works. You want to get on the ladder. That $1 million house in 10 years time is probably going to be worth 2. That's their money too. They can access that through home equity lines or when they sell or, any other number of ways. So this analysis doesn't even really take into account that, which is a very important part of home ownership. But just on a pure cash flow perspective, it's significantly cheaper, 20 to 30% cheaper to own that same house versus buying it or versus renting it. So I just think that's a good thing to talk to your clients about. For me, the tax benefit is huge. This benefit that you get here, this $1,100 a month, is back in their pocket at tax time. So it just makes a lot of sense. Does that make sense to people? I know it's a lot of numbers, and I think most of you already know this stuff. But it's just good to refresh people on that. I think sometimes that helps get renters off the renting fence and into the buying mindset. So good spreadsheet. Happy to share that with anybody. It's very easy. It just assumes this, $1 million purchase, 20%.
Hey Jack, I'd like a copy of that.
Yeah,
that's
of course.
Because I actually,
and this is it's an amortization schedule
talking
too.
about that.
Yeah, I'll share that with Ashley and she can send it out. Again, this is just me playing around in Excel and creating something very simple. It can get, there are other things that can be added in, and there are assumptions made here, but they're pretty conservative assumptions. So I think that this is pretty accurate. But I'm happy to share that. The other thing I wanted to talk to you guys about as well is your expenses. So I've talked in the past about you guys keeping good track of everything. Anything that smells like it might be an expense, it probably is, or it should be. So I would, keep track of when you take people to lunches, keep track of when you buy ink for your printer, keep track of, the square footage of your home office so that you can write that off, and your utilities and your housekeeping and all the parts of that. If it's 10% of your house, your office space, 10% of all of the expenses to run that house are attributable to your office. So those can be written off as well. Things to think about. Again, if you have questions about what you can write off and what you can't, you should ask me about it. But my general rule is act first, ask for permission later. If you think that it's a write-off, it probably is. The IRS has the burden of proof of proving that that's not a write-off. It's very difficult for them to prove that something's not a business expense. So I tend to be on the aggressive side with that stuff. A little bit, it depends on your tolerance, but I would suggest that. So here's the thing, right? If you went to Vegas and somebody told you could put a bet down that would save you $1,000, but there's like a 0.5% chance that somewhere down the road you're going to be audited and you're going to owe that money back plus 10%. Wouldn't you take that bet? I mean, that's a no-brainer. The penalty is 10%. So, you might have to pay $1,100 back on the $1,000 that you wrote off, 5 years ago. So I don't know. To me, it's worth the risk. Within reason, obviously, you don't want to write off like, you take your kids to Disneyland. You shouldn't write that off. You know what I mean? But it's there are things that make sense and there are things that don't. Mileage rate for 2023 is 65.5 cents per mile as well. Anytime you're going to a meeting, anytime you're going to see a client or do marketing or any of those things, I would keep track of your mileage. Typically what people do is they'll figure out their beginning mileage in 2023 and their ending mileage in 2023. And they'll say that their car was 20% used for business, 50% used for business, 100% if it's a company vehicle that's just used for business. And then you apply that mileage rate to it. And that is also kind of a hefty write-off for you guys. So that 65.5% or percent, sorry, 65.5 cents per mile includes things like depreciation and wear and tear and all of that. So that's what that number is for. What else do we want to talk about? Yeah, let's dig into the S Corp and sole proprietor and LLC stuff. So I think a lot of you guys just run your business through as a sole proprietor. I think that's pretty common for a small business owner, being basically somebody that has one employee themselves. The reason most people do that is because it takes no effort. There is no, you don't have to file anything. You don't have to become a corporation. You just file your taxes as a sole proprietor. It's not usually the best way to go, though. When you're a sole proprietor, you owe self-employment taxes. Self-employment taxes are 15.3% of your net income, so after expenses. So, for example, if you pay $50,000, or sorry, you make $50,000, you're going to owe $7,000 in self-employment taxes. Half of that number is you can deduct against your other income for regular taxes, but it still works out to you're owing somewhere around 12% of your income when you're a sole proprietor. If you choose, the easiest route is to form an LLC. LLCs have a lot of the same benefits as S corporations. They limit your liability. That's why it's called a limited liability company. What that means is that if for some reason somebody files a lawsuit against you, or somebody, any number of things that where somebody's coming after your stuff, the LLC protects you as an individual against them coming after you. They can only go after the business. So it's just whatever's in the business that's at risk when you file an LLC. The annual cost for that is $800 flat, no matter what you make. So there is a cost associated with it, but I mean, as you can see, being a sole proprietor, if you plan to make any money, there's a cost associated with that too, and it's usually a lot higher than $800. So that self-employment tax is usually in the thousands. So it makes sense a lot of times to set yourself up as an LLC. The other option is an S corporation. Very, very similar to an LLC in a lot of ways. An LLC is usually best for somebody who is just themselves. S corporation, for example, works very well for Siri and the brand because it's for people that have less than 100 employees. It's a pass-through entity, so you don't owe taxes at the corporate level. You owe them as an individual once the net profit of that business gets pushed through to you. But it does offer the same protections. It can be more expensive. It's either $800 or 1.5% of your net income, whichever is greater, you're going to owe in corporate taxes every year to California. So, you know, if you're making, if you make $100,000, you're gonna owe them $1,500. If you make $50,000, you're only gonna owe the $800 because that's the minimum. Or sorry, that's like the baseline that you would pay. So there are benefits to both. Really, there's very little difference between an LLC and an S corp. It just depends on your size, whether that's beneficial to you or not. If you're paying yourself a salary out of the S corporation or the LLC, you will still be paying employment taxes. You're just paying them through the paycheck, though. So just be aware that, I mean, the reason self-employment taxes are in place for a sole proprietor is because it's a pass-through entity. So you don't owe taxes at the corporate level. You owe them as an individual once the net profit of that business gets pushed through to you. That is to cover the self-employment taxes, Medicare, FICA, all those things that you would normally have paid as like a W-2 employee. That's why that's in place. And if you pay yourself through payroll through your corporation, you're going to pay the same taxes. So just you'll want to do the math on that to make sure all of that makes sense. It's a numbers game. You know, does it cost me less to be an LLC or a sole proprietor? You know, that's what you're trying to figure out. So does anybody have questions on any of that stuff? I know it's a lot. No, everybody's got that dialed in, huh? Cool. Good. Let me know when you figure it out, and I'll tell you if it matches what I think I know about it. So I just on a personal note, I am also taking on clients. So if you guys need me, or if anybody, you know, anybody that needs somebody to run their books, or you have clients that need their taxes done, or you need your taxes done, I'm here to help with that as well. I'm happy to talk to people about it. Typically, if I'm taking on a client and they're going to be my client and I'm going to run their books, there's kind of a base rate of $250 a week, which is $1,000 a month. So you have an accountant for $12,000 a year instead of actually hiring somebody. That's kind of the base for more basic bookkeeping. It goes up as the hours go up. So if anybody has questions about that or knows anybody who needs it, I'm here for you. So that's pretty much what I wanted to cover today. So it's your, also, sorry, one more thing. You should be contributing to the 401k. Siri and the brand offer that to you guys. It's a great way to save money. It's if you go the Roth option, you pay taxes on it and then contribute, then you don't have to take taxes out when you take the distributions when you get older. If you go the traditional 401k, it comes out pre-tax and you deal with the tax implications later when you make the withdrawals. But it's a great way to save. If you are making a ton of money now and you expect you won't have as much income when you retire, the traditional option is better because you'll be in a lower tax bracket when you're making less money when you retire. If you think you're making not so much now and you're in a lower tax bracket now and you expect you're going to have tons of income when you retire, it's probably better to go the Roth option and go ahead and pay the taxes now and contribute post-tax. So, but anyway, that's there for you guys. You should use it. It's good to plan for that stuff. Plus, the brand matches whether you, as an employee, and this is not for the realtors, this is for Ashley, really, I guess is the only one on this call. But yeah, it's not really it's not a contractor based thing. It's an employee based thing. So I don't know how many people on this call this applies to, but if you're not an employee with the brand, then you should be doing it yourself through like a self-directed IRA. It's good to save. So good to get on early too. So does anybody have questions about anything that I've just gone through?
Looks like we've got a question in the chat.
Yeah.
Rashia asks, Jack, assuming annual dues / fees, etc. for us are all tax deductible, Realtor Association, Supra, Century, etc.
Absolutely. I mean, those are easy. Those are that's the low hanging fruit. So like, yeah, and obviously all of your fees, anything you pay to keep your license up, continuing education, all of that stuff is definitely deductible. When I was talking about, digging a little deeper, I'm talking about things like, I took a friend to lunch and I talked to them about real estate. Like, do I deduct that? I mean, like that's the kind of stuff I was talking about, which is a little more, kind of in the gray area, but yeah, for sure. All of your fees and your licenses and all that stuff. Yeah, I'm definitely. And I'm not seeing the chat. I should see.
That's okay. I can continue reading it off to you.
I can
Rashia
actually
also
unshare
says,
my screen now. I don't think you guys.
Okay. Marketing materials, items purchased to do open houses. Yeah, Rashia, anything, Jack, I mean, it sounds like anything you're purchasing for your business is a write-off, right?
Oh yeah, for sure.
Cool.
Yeah, definitely. Sorry guys, I'm going to try to figure out this.
You're good. There should be a bar near the top or bottom.
Somehow I've lost the main thing. Oh, there it is. Okay.
Yeah. Any other questions for Jack?
Yeah, I have a question, Jack.
Yeah.
When can we expect to receive our 1099s?
So Real has your 1099s now, not me.
Okay.
So you should be getting them any day now. They have to have them out by the 31st. Yeah, traditionally that's been us, but this year I was told not to do them, that Real was on it. So,
Okay.
yeah. But yeah, they required by law to have them out by the 31st. So I would guess they'll be in your mailbox today or sometime next week. So.
Awesome.
Nathan asks in the chat, can you deduct commute to the office? And can you do that if you're also deducting for home office?
Wait, say that one more time.
So Nathan, he's an agent on the team. He asks, can you deduct the commute to the office? And can you do that if you're also deducting for your home office?
Yeah, of course. You can have more than one office. And your home, you know, as a realtor, obviously your home office is going to have significant use as well. But yeah, and anytime it depends where you work most. Hold on, let me just get rid of this. So like if your home office is your primary place of business and then you have to commute into the office for a meeting or something, that's not normal. So yes, you can put that as mileage. That would be like going to a meeting, you know, with a client. So does that make sense?
Makes sense to me.
Okay. There's the chat. I found it finally. I wish I could make my screen big again, but I can't seem to. So
anyone?
Stop share. That's what I was looking for.
There we go.
I found it.
Any other questions for Jack?
I got one. What would you say for like a baseline for annual income? Would you start an LLC or an S corp?
I think that if you don't have a lot of income, like if you're, you know, 50,000 or less, then you probably are okay just doing a sole proprietorship. But I think as you start to approach that like 60, 70, 80, over 100 range, it makes a lot of sense. And I would recommend for individuals to not pay themselves payroll. I would recommend that they take distributions. Then you avoid the self-employment tax stuff. You're really just paying the LLC fees or the S corp fees, if that makes sense. The self-employment tax can really add up. I mean, you know, if you have $100,000 in income, you're talking about $15,000 in self-employment taxes. So it's not small. So yeah, yeah. Typically, I think somewhere around 60 or 70 is kind of the baseline when people start. When you start getting employees, that's when you probably ought to start looking into, you know, some sort of an S corp structure. You really don't need it as an individual. I mean, you can do it. It's basically the same as an LLC though. There's really there's no crazy differential between the two. So for self-employed people.
Thank you. I have another question too. Do you recommend for like 401k for us as realtors, the solo K?
Yeah, that's a good option. Either that or just like a self-directed IRA, which you can do through pretty much any financial institution. I mean, you know, whoever you bank with can set up an IRA for you. You know, they usually are attached to Merrill or somebody else, but it's a good idea. You know, I can't force anyone to save for retirement, but it's probably a good idea for you guys to do it while you're making money, you know, because who knows what's going to happen in the future. It's always good to throw some stuff aside if you can. So probably easier to do in 2021 than 2022, but you know, when the market was killing it, but yeah. Anyway.
Yeah, thank you.
No problem. Anyone else? Rich looks like he has questions. Lots of questions.
I always have questions. I just can't think of them right now. So I'll have to hit
No
you
problem,
up.
man. You're on delay.
I actually thought about going over and knocking on your door and sitting on your shoulder just so I could be right there.
Yeah, you should, man. Come over here. You can come over with all the construction workers at my place.
Nice. Bring him over here. We need him here now.
Dude, you guys got to come look, man. I think they did what you guys are trying to get done. So.
Oh gosh, just rub it in.
Take a look, see if you like them. I'll recommend them. So.
Yeah, well, good, dude. Well, we're
gonna
gonna wait.
$30,000.
Yeah,
ripping up your
yeah. The last recommendation we got just Oh, yeah, never mind.
Yeah. Yeah, brutal.
We'll let you go a little further and then we'll figure it out.
Yeah, yeah. Well, we're next week. I'll get you.
Yeah. But no, what you said about the taxes as far as renters go, literally this weekend, it was George, myself, and Sam, and there was this girl that was talking about renting and how she was getting a better break on her taxes right now as opposed to going and purchasing a home. And George and I were just looking at her like, this just doesn't make sense,
No,
And
it
so
definitely doesn't make sense.
yeah, so for you to be able to have that, for us to be able to be schooled, and all of us as agents understanding how important that conversation really truly needs to be, because right now in this market, there's a lot of people that are like, hey, I'm just going to continue to rent.
Yeah.
When we can provide that factual evidence and say, hey, no, here it is. Let me show you something real quick.
Right.
That's
well, and a lot of people don't, they, and I know it's a cash flow thing, right? But a lot of people don't consider the principal that they're paying. And honestly, the principal is your money. I mean, people just don't get that. It's not like rent, it doesn't go down a toilet. It reduces what you owe in the house, which therefore builds equity, which you can go to like a bank later if you need to. You know what I mean? I mean, you can go back in and get a HELOC and pull that money out if you need to. You can keep it at that same level. So people don't really get that, I don't think, but it's there, So.
And for us, I mean, as agents, we're not qualified to talk about the financial part of things, So for us to get whatever little bit of information we can from you, and then to be able to relay that over, and then if they need, then we can say, hey, either you talk to your CPA or I've got someone that you can talk with.
I mean, that's an easy conversation, man. That's a no-brainer. Yeah. I mean, all of these things are really conservative estimates too. Like that like renting a $1 million house is getting it for $5,000 to $6,000 a month is unlikely right now. Like you're not gonna be able to rent that house. I mean? Like that was a very conservative estimate based on what I saw. You can rent an apartment for like $3,500 or $4,000, but like renting a house that you would buy, I mean, I think that this is the minimum you would save, what I just showed you guys. So I think that there's a lot more upside, honestly. Plus you own the house, and you get the appreciation.
So, and then another thing is, as agents, we need to make sure we've got the clear understanding. So when we're traveling, now, obviously, when we go to collect those receipts that we get from the machines, the ink always seems to disappear.
Yeah.
When we go out for certain dining, or if we go to certain places and we save those receipts, the ink disappears. Yeah. So what can we do as agents to make sure that we're keeping dibs on all that? Are we supposed to write down like maybe in a book somewhere and just say, hey, on, January 31st at 12 to 3 o'clock, I drove for the company X amount of miles, or how do we go about that?
For the driving, it's good to keep track of it. Unless you're just going to use like a standard percentage. I honestly recommend that people do that instead of trying to track your miles, because tracking miles is a pain in the ass.
For sure.
I would just set a baseline, a reasonable baseline on how much you use your car for business, and have beginning of the year mileage and end of the year mileage, and apply the percentage. You know what I mean? That's the easiest way to get around that. As far as receipts, I don't know the name of the app, but there are a lot of apps out there where you can snap a picture of it and it goes into your app. I mean, that's what I would suggest you guys do. And then just have everything. If you ever get audited, you're just like, here you go, here's the dump. Like, here's all the receipts. You know what I mean? Like,
that's a good way to do that.
Yeah.
Okay.
And don't organize them. Don't organize them for the IRS. Make them dig. They'll never figure it out. They're too dumb. So, yeah.
That's awesome.
The key is to make it as confusing as possible. They do that to you, so why wouldn't you do that?
Oh, for sure. And this is coming, obviously, guys, from someone who worked for the IRS. So you are aware. That's who this guy is.
Bunch of idiots. Idiots in there, man.
That's why we have Jack.
Yeah, for sure.
He has been there on the front line.
Yeah, and I'm seeing comments. Yeah, I will make sure that, hey, Ash, Can you send out my contact information to everybody if they don't have it? Maybe just like
Definitely.
a spam email. I'm seeing
Yeah.
people in there that say they love me and want more.
Yeah,
This is
so
good.
when you send me the spreadsheet, I'll be sure to send that out to our entire team, and I'll put your contact, like your email, phone number,
Okay.
all of that in there. And then I'll also, for you guys on here, I'll put it in Slack and I'll pin it as well, so that you can easily go back and reference it. So.
And guys, I was also a mortgage originator at one point too, so I understand what they're looking for qualification, and I understand the mortgage business pretty well too. So if you have questions about that kind of stuff, I'm sure you have lenders. I mean, I know you guys have lenders approaching you all the time, and be my preferred agent, blah, 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 all that stuff. Like, I know that's happening to you. But if you ever have questions about that kind of stuff, I'm happy to answer it as well. And I also have, things like amortization worksheets for different kinds of loans, like 15-year versus 30-year and all that stuff. So I can send that to Ashley as well. That way you can just plug numbers in and you can show somebody like, this is what I think it'll cost you, for this house, if they're interested. So, yeah, I can send those too. I got all kinds of spreadsheets. That's what I do for fun, Isn't that what you guys do for fun? Play with spreadsheets? No? Okay. All right, guys. Well, that's pretty much what I wanted to cover today. If haven't talked about something you want me to talk about, or if any questions you have, obviously you can reach out to me individually. You can ask them now, whatever you want, whatever you're comfortable with. So Ashley's going to make sure you have my contacts and you guys can harass me. During tax season, if I don't get back to you right away right now, that's because I'm underwater like normal. So, but yeah.
All right.
Cool.
Well, thanks, Jack.
Yeah,
and thank you
of
everyone
course.
for joining. Cool. All right.
Yeah.
Have a great day.
You.
Bye, guys.
Bye, guys.
See ya.
Thank you, guys.